I think the economy's in very good shape. If you look at where we are at 4 over 4, so look at the fourth quarter over the fourth quarter, we've seen that steadily ramp up since the second quarter of 2016. It was 3.1. Inside that number, you've got a very solid household sector. It's been between 3 and 2.7% 4 straight years. No reason for that to change. A lot of jobs, wages are rising, income growth is quite rapid. We saw business investment drop a little from last year, but still up from years past. That was a concern in the third quarter, rebounded in the fourth. So that's good news. I think the government spending is a bit of a sugar high. We saw a big boost from that, and that is going to go away, no question. But I think we'd also ought to expect the residential sector to turn around. It's been a drag on growth. If it even goes flat, we're back at roughly 3% again. So I'm actually quite pleased with the report, and it makes me optimistic about the outlook.
Jason, I'll put the same question to you. Do you think it's reasonable to think we could see 3% growth as far as the eye can see, especially if we get some of these trade overhangs resolved?
I think it's absurd to think you're going to see 3% growth as far as the eye can see. And as far as I can tell, the only people forecasting that are Republican operatives. You don't see anyone on Wall Street forecasting that. You don't see any of the independent economic forecasters, the institutions, the CBO. It's only Republican operatives. They're cheerleading for the tax cuts. Look at what's happened to growth rates. They were lower in Q3 than Q2, lower in Q4 than Q3. They're projected to be lower again in Q1 of next year. We had a huge fiscal stimulus this past year that's not going to be repeated. We're closer to full employment than we were before. Maybe we're past it. The underlying potential growth rate of the economy appears to be about 1.75. That's a pretty broad consensus view. And in fact, as far as I can tell, just a month ago, everyone was going on about how weak the economy was and how vulnerable it would be to an interest rate increase. You had President Trump out there saying, if you raise interest rates, you're going to destroy the economy. That's not what you say about an economy you think is going to grow consistently at 3%.
But Jason, in a relative sense, two relative senses. One, when President Trump came to office, he's done better than people forecast at that point. And perhaps more importantly, in 2018, particularly in the fourth quarter, he's done a lot better relatively than almost all of the developed world, which is something to applaud.
Absolutely. The United States had a bigger fiscal stimulus than anyone else in the developed world in 2018. I predicted that would increase our growth rate in 2018. And just like any of our Keynesian models would predict, you do a big fiscal stimulus, you get better growth than everyone else. The question is, will that carry into 2019, 2020? I don't think so. I don't know of anyone other than Republican operatives that do think so.
Doug, I want to dig into this full expensing situation a little bit more because, yes, we did see the numbers soften a little bit, you know, the business investment numbers soften in Q3 and start to come back a little bit in Q4. All of this with all this uncertainty around trade, with slowing global growth. You know, you've had Kevin Hassett, Larry Kudlow come out and say that we haven't even realized the full effects of that change to the tax code. Do you agree? And do you think that's something that does begin to materialize this year?
So we don't know the full impact of the tax code. We really don't. We can't. There are going to be 1,000 PhD dissertations written trying to disentangle the good news that came out of the Tax Cuts and Jobs Act and the deregulation versus the bad news that's come out of the trade policies. I think that's all there is to it. And unfortunately, the net effect is what you get on the ground. So I've been concerned about that. I was pleased that the fourth quarter rebounded somewhat. I think it goes straight to the core of Jason's concern, which I'm sympathetic to, which is if you believe, as he does, that the potential growth rate's still stuck at 1.7, well, then there's no way you'll grow at 3% for any sustained rate of time, and I would agree with that. The real issue is, have we made a dent in poor productivity growth? Are we going to see that go north? We don't know yet. No one can know yet. But at the moment, we do have this phenomenon, which is wages rising, no pressure on prices. The gap between that is productivity. It's not been measured yet, but it is promising that we're getting a little bit of a productivity rebound. And that is the key.